John Silvia, Wells Fargo, Chief Economist. Good to talk to you here at Camp Kotok.
Absolutely.
I'm glad you took a break from catching all those fish to
Yes.
talk about the economy, because we've got some interesting couple of weeks ahead. We have the July jobs report. We'll have one more, then we have a Fed meeting. Do you think there will be rates raised, and what are you going to look at in the next couple of weeks ahead of that meeting?
Yes, we do expect the Fed to raise interest rates in September, and for us, it has to be the inflation data. At this point, they're getting the improvement in the economy, certainly in terms of the job market, but what they're not seeing are the inflation numbers picking up. And the question will be, for example, the employment cost index. To what extent will that increase as we look at the new data?
What about the fact that you're not seeing inflation anywhere else in the economy? We're seeing prices fall, certainly on the commodity side.
Yeah, I think one surprise to most people is actually since 1994, U.S. inflation has actually averaged less than 2%. So setting 2% as a goal is actually quite challenging. And I think what's happening is it's saying to the Fed, as you've noticed in the dot diagrams, the Fed has continually lowered its long-term interest rate outlook in terms of the federal funds rate over 2016, 2017. I think that will continue. So what it tells me is, yes, the Fed will move in September, but in 2016 and 2017, the extent of their moves will be very modest.
What about the fact that for many people, the economy still doesn't feel like it's moving? It's not growing at the level that we saw years ago. So won't this create a problem once there's a little bit of brakes put on things?
Yeah, I think the challenge, as we know in the United States, is when the Fed eased, financial markets reacted very positively. So those with financial assets have seen some improvement. Those with housing assets have also seen home prices rise. Well, when you look at the other part of America, you'll notice that the job gains for what we traditionally call manufacturing or back office workers has been limited. So yes, you continue to see that part of America, in terms of long-term unemployment, part-time, looking for full-time, continues to be fairly high. So there is this split in the United States where you do have success in some areas, but continued weakness in others.
Should the Fed worry about that?
Oh, absolutely, the Fed should worry about that. And I think most of public policymakers in Washington realize that, because you want everybody to participate or have a sense of participation in the economy. So it is a concern.
John Silvia, great to talk to you.
Thank you, ma'am.